Well, cue the fire. Jamie Dimon is coming out and saying that this is serious. And I say, why so serious? Which I think is a great quote for basically the clown world that we are currently living in. I don't know if you caught this, but someone was just given the Nobel Prize in Economics. Now, who could have won that? Oh, Ben? I mean, could Ben Bernanke have effed our economy up historically worse? I would have to say no. I mean, based on what Ben did, we've been kicking that can down the road. Now the can can't be kicked. The thing's the size of Uranus. And truth be told, I've never measured the size of Uranus, so that is fake news. Also, I don't know if you caught this, Kathy Woods is writing love letters to Jerome. It probably has to go through Janet. Janet's like, all right, Kathy's writing you these letters again. You may want to open it. You may want to open this one. Kathy Wood. Why do I call her Woods? Oh, whatever. Ark. She's not even, she stepped down, right? Didn't she quit? She's like, that's it. Screwed the pooch on this one. Kathy Wood issues open letter to the Fed. Hey, Jerome, saying it is risking an economic bust. Yes, Kathy, we know this. But you have to remember, Kathy, he has 400 PhDs that are experts in economy. But Kathy is saying that all the numbers that Fed officials are looking at, they're all backwards, right? They're all in the rear view mirror, which, yes, Kathy, we know this. And she also goes on to say that we are going to have a deflation. You don't use that word. People on YouTube get we're going to use the word disinflationary, not deflationary bust. Everyone with now 10 new jobs trying to survive, you don't want to use the word deflationary when they're experiencing everything 12 times the cost it was 2 years ago. But Kathy, get in line with the clown tickets, okay? It's just a performance. Just go buy some popcorn. Michael Burry and I and you and everyone that subscribed because you subscribed, because I tell one funny joke and you say that was funny, I'll subscribe. We all sit back and watch the clown show as Bernanke gets Nobel Prize in economics. Not a joke. And I say it is a joke. This entire system that we live in. And I try to explain people, like, just the stupidest thing. Like, for example, money. That was silver. That's actually money. Where's that come from? How many people know where money comes from? That would be 0.0001% of the entire. I don't even think the Fed knows where money comes from. I mean, even when he was interviewed on CNBC,
flooded the system with money.
He got it wrong, but everyone's like, yeah,
yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money.
Thanks, Jerome. I've tried to explain to everyone on this channel, money comes from loans in the banking system. That's it. All they do is they create Chuck E. Cheese tokens and they swap them with your money in your bank account. But I guess by doing that, we get the Nobel Prize. And if you're wondering who that is, that's Michael Burry. The best. He was an actor for him. That was Christian Bale, if I got that one wrong, which I'm sure you'll correct me. I mess anything up. But I can say nuclear. Okay, all right. Do that one. I hate these. I hate this brain of mine. This is serious. Jamie Dimon says, this is breaking news. I'll turn that off for you. It's not really breaking. S&P could shed what? Another 20%. Well, that is a good news if you are shorting this. If you are not, that is a haircut, which I've never had one. Warns of recession in 6 to 9 months. No, we're in one now. And we are falling off a cliff in everything. You see the car market? Gone. See the housing market? Right? We're above 7%. You getting out there and you want to know who refinanced their house over the last 3 months? No one. You want to know who's going to refinance? No one. You want to know who's going to buy a house? No one. I mean, at over 7% interest rates, this isn't going to be a recession. This is going to be a depression. The entire world is like, please stop. We need liquidity. Well, you're not getting it. And this article actually calls him a doomer territory. Oh, you come over here to my side, warning that while the U.S. economy is actually still doing well, okay, if you say so. I'm sure your lifestyle, you wouldn't understand what normal people live, but that's okay. I'll just give you the benefit of the doubt that you don't know what you're talking about. At the moment, there are very serious things which I think are likely to push the U.S. and the world. The world's already in a recession. What are you talking about? Could be. Come on, Jamie, do you not like travel? I mean, Europe is already in a... Yes, Europe is already in a recession. Yes, that's correct. Thank you, CNBC. And he's saying we're going to have another 20% haircut. 12E's numbers. Look, Dow got chopped up just when you thought. Friday, Tara, can we breathe? Jerome, can we come up for some air? Dow's down, Russell's down, NASDAQ's down, everything's down, well, except for your portfolio. That's because you have Portfolio Shield. Link up there. You laughed if you follow Steven. And how is that S&P 500? Underneath, this is on the 4-hour. Oh, you're rolling. There it is. MACD, confirm we're going lower. Yay! There's that blue line right in the sand, keeps beating its head on it. And even if I pull out on the daily, still beating your head on it. Yep, we're going lower, and almost confirmation on the daily, heading lower. Oh, and just in case you're watching this tomorrow and you're like, the market rallied, it went up. Okay, yes, it's going to have that. You can't have your MACD on oversold position. Hate that one. Overbought, oversold. You can't it doesn't hang out there long. So you'll probably put in right there. You'll probably put in, let's see, that's the head. That's the left shoulder. You'll probably come up, retest it, and get rejected and probably come down to about 2,800. But that could take some time, Gustavo. Also, everyone needs to be aware you are suffering from recency bias. When a market bounced and it just came right back up because of the Fed. No, it wasn't. It actually wasn't the Fed. You want to know when the Fed pivot to zero? Right there. You want to know what happened? It's still sold off. And let me take you back in time during the cold virus that went around. This February, you see this big sell-off. And then in March, the Fed's like, okay, we'll take rates to zero. You want to know the gains that it put on? That much. And then the sell-off continued. Boy, won't you all be just confused when the Fed takes rates to zero and the market still tanks. This is when you had a $3 trillion CARE Act passed. So I need you to know, even though you should have recency bias, you just went through it, just because the Fed takes rates back down to zero won't be enough. Also, before I forget, take advantage of my How to Make Money Going Down course, Bear Market. Link in the description. It's only $200. But the day I'm finished with that, price is jack. I mean, $100 right off the something. Back to the chart. So it won't be the Fed going to zero. You're gonna need, I'm sorry, I hate to say it, just follow Gruesome Newsom over there in California and start doing this, right? Everyone, this is going to solve inflation. We are just going to give you some more money. Just hold on. We got to create the bonds first. And you want to know what else is also happening? The repo market, okay? I'm trying to give you a big picture of everything that's happening right now. You go deposit your money because you're scared into the savings account. And then they say, are you sure you want 0%? Why don't you put it into a money market fund that ends up in the reverse repo, which right now all of the bonds are rolling over and they're going right back to the banks. And the bank's like, we can't hold this stuff. We're going to get in trouble. So they're begging you, put it in the reverse repo. You get 4% on a money market account. Let's do, right? I don't want to risk. You have $1 million. What is that, $40,000? I mean, that's kind of a no-brainer, right? No risk, even though the entire system is risk. But the more you have these kind of rates in a money market, everyone's moving it, and they're going to break this. This is going to break. It's going to go. Actually, this entire system that they try to fix, right? They're like, okay, let's fix this. Let's move all of this over here and let's move on. It's not. Something's going to go. And how do I know this? Well, that is because everyone is leveraged to the other side. We're all just waiting. We're like, okay, let's pop this balloon, which you're currently seeing in the stock market, right? That's heading lower and lower and lower. Why? Because people are like, F it. I don't want to risk this thing, so I'll just throw it in a money market, which is causing everyone to move away from this place and go into a safer place. It's like, well, hey, at least I'm 4%. That's great. Especially when you're looking at risk assets like the stock market just had a 20% haircut. And now Jamie's telling you're going to get another 20, 40%. That's a little risky. I mean, that'll take you from a thousandaire down to $1 or a millionaire to 1,000. These are huge shifts. And also, when it comes to recency bias, just know, I just randomly here, 2015, you got in here, March, right? You had to wait 2000, actually, yeah, that's closer to the beginning, right? 2015, 16, 17. I mean, are you okay waiting 3 years, 30 years, 20 years? I mean, coming back to even 2017, right? Okay, let's go. You just happen to have bought the top, and you have to wait, right? It takes a long time. That's why I offer courses on bear markets, bull markets, swing trading, like take advantage of the down, take advantage of the up. And also, for those of you that like Elliott Wave, I know a guy that's predicting, and I've said this, I mean, there's a couple plays. There's an Elliott Wave. If we don't get above that line, which if you hit your head on it, and that's a 5 to 10 year bear market. And I've also talked about the kiss of death, rarity on the S&P 500 only. That blue line that I said if it hits it, it's going to break it, has to break it, and then close below it. You're looking at a long time. And look at your MACD. Do you see those two lines? That's converge, diverge. I see they converged and diverged there. Did you see it happening right there on the monthly? No. We have more room to the downside, which could take us a lot farther than that, right? Recency bias. What are you going to do now? And this is not capitulation yet. And even when CNBC tells you, right? Jesse Pound, Goldman is saying retail investors are near capitulation. And I say, yeah, you're not near it yet, as they flood billions into what? Just what I was telling you. Oh, a money market account? Great. Maybe I can recoup my 90% haircut I just took in cryptocurrency, which I have to say, I am actually shocked. Bitcoin almost looks like a risk-off asset right now with everything else crashing, but don't let it fool you. Also, my apologies. Yesterday, I said Bitcoin, because back in the day, a year ago, it wasn't legit, your private keys. I guess they changed that, so you guys have wallets now. I would like to redact. I would like to apologize for that. But looking here, again, hey kids, this thing's going to go boop. That's like jumping up and down on drywall. Down, up and down, up and down, up and down. And boy, I mean, trading this stuff is Lambo money. You got to kind of start with Lambo money, right? You turn a lot of money into a hell of a lot of money. You just need to know when to put the sell button. But also, if you're new, ouch. If you're new to this and you don't, again, take advantage of everything that I offer. So while it's happening, I think we have a lot of room to the downside. Learn how to trade it to the downside. When we get towards the bottom, I'll say, I think we're getting close to the bottom. Or you could just do absolutely nothing. I guess I respect that too. And I will see you tomorrow.